bulls coming in on the M15 time frame, then we know that to buy, we're buying basically to keep selling. Hey, yo, what's good, everybody? This is your man, Prof Zones, and Prof is not for professor, but for profits. Oh, yeah. Welcome to episode 7 of GroundUp Breakdown. And first of all, guys, I'd like to say I appreciate all the love you've been showing me. You've been showing these videos. Every single person that actually watches and engages in the content, I appreciate you guys. Please keep watching, because we have a lot that is in store. Yes, we have a lot that is in store. Soon I'll also be launching fundamental breakdowns, so that you guys that don't know about which events and why certain events drive the market in specific directions, you guys that don't know about that information, you'll be able to actually start engaging and teaching yourself fundamental analysis, to be specific. But yeah, without any further ado, let us just do a quick recap of what we were looking for last week. So we were looking for bulls, right? So we were looking for bulls. Let me just do this and annotate properly. We were looking for bulls, right? But there were specific zones that we were also looking at in case the market just doesn't want to buy. And we'll get into that in lower time frames. So we were looking for bulls, right? Seeing that this level right here has a lot of buyers, and we have reacted to that level with this bullish candlestick. So we were looking for more bulls to chase at least this liquidity right here, and ultimately to at least break this internal range liquidity. So with that said, guys, we were just looking for bulls, right? And on the lower time frame, on the daily time frame, basically, we were looking for bulls to buy in this fair value gap here, over here, to start engaging into buys. That is if we opened up and cleared this wick just to get into this fair value gap, which that didn't happen, right? And the lower time frame just showed us exactly why that isn't happening. So with that said, when the market started to push up, then we knew that we had this liquidity right here. And for those that like to just draw liquidity as in just a higher high, this liquidity right here. So we had that liquidity, and then we had this buy side liquidity, external range liquidity right here, right? So when the market swept this liquidity over here, guys, when the market swept the liquidity over here, let's look at the H4. It was so beautiful. Why? Simply because it swept that liquidity right before CPI, right? So right before CPI. And as we know, after liquidity has been swept, and then the market gets back into the range. So after liquidity has been swept and then the market gets back into the range, then the market will be attracted to the next fair value gap, which it's this one right here. So that's how we knew that CPI will sell, right? So the dollar will sell. Okay. So basically, let's move into the hour. Look at how beautiful this sweep of liquidity was. We swept the liquidity, then we had an engulfing candlestick, showing us that the bears are taking control. And after that, we consolidated for the rest of the New York session into the Asian session until CPI, literally. And then we just shot all the way down, right? And then we just shot all the way down. So basically what I was looking at was round about here at this, I was looking for this order block right there to become a breakout block, Why? Because liquidity has been swept. So that was my zone of selling, right? Let me just do this. Trade levels, as you can see, there's a sell right there. And I was looking for that breaker block to be violated. I wasn't looking for that breaker block to hold. Hence why I put my sell stop right at that breaker block. And my stop loss was basically right above this high right here. So in case I got tagged out and then the market wanted to just wick all the way up just so that it can push down later in case that was going to happen. And lo and behold, the market just triggered me and it went all the way down. And the reason why I left it is simply because on the weekly time frame, on the daily time frame, after we have swept this liquidity over here, I know that we were chasing this fair value gap. So I let the market close that day. And the market closed way beyond this fair value gap. And I was like, perfect. So now all I was looking for is that for Thursday, the market to just come into this first fair value gap right here and see how it's going to react there. And lo and behold, that fair value gap held. And I didn't want to add in trades because I didn't see a reason to, because the whole point was not to scale in, but just to hold this trade for as long as I can. And yes, guys, that held, and into the Asian session, the market just pushed all the way down. When I came back into the charts for my London kill zone, the market was actually swiftly pushing down on Friday, and I was like, perfect, I'm just going to leave this trade to run until the day closes. In fact, I was supposed to close this trade, guys, at night, and a lot happened on Friday, so I ended up forgetting to close this trade, but I knew everything is in place, so it wasn't really much of a trade smash. So yeah, guys, that's what we were looking for. This is what happened, and this is what we traded. So as you can see on the 15-minute time frame, what am I doing? Let me just get rid of that trade level. As you see on the 15-minute time frame, the market didn't get into this zone for us to buy it, right? It actually just stopped at this order block here. Some might call this a QM, right? It stopped over there, and then it started to push all the way up. As soon as we broke this high right here, that's how I knew that, nope, we're actually going to push all the way up to fetch that liquidity. And that's exactly what we did. Once we fetched that liquidity, after we took that liquidity, the market got back into the range, consolidated, which is a beautiful sign. And guess what? CPI hit and we sold off. Simple. So yeah, guys, with that said, let me just get into this week's analysis. So as we can see, guys, we are very much bearish. We are very much bearish. So with that said, it's easy to see where the market is attracted to, right? The market is attracted to this fair value gap right here. This fair value gap right here. This daily fair value gap is where the market is attracted to. Why am I saying that? Because we have just swept liquidity. We just swept liquidity over here. We swept that liquidity, and after we swept that liquidity, the market is attracted to a fair value gap. It violated the first one, and now it also violated this internal range liquidity. And guess what? It's heading for sell side liquidity right there. It's heading for that sell side liquidity. And right below the sell side liquidity is what? Is our daily fair value gap. So with that said, let me just mark that sell side liquidity. So since the market, so we're looking for the market to react off of that liquidity right there, and then to sweep that liquidity right there, and then we look at our lower time frames to see if the bulls are ushering in or not. So yeah, guys, with that said, basically that's what we'll be looking for. Now let us now move into the H4 time frame. So the market can easily, guys, keep in mind, the market can easily sweep that liquidity right here. Let me just annotate. It can easily sweep this liquidity right here, pull back into this fair value gap right here, just so it can carry on selling, right? Selling, just so that it can carry on selling. So now, why am I saying that? Why am I saying that? Let's move all the way into the weekly, guys. All the way into the weekly. Basically, on the weekly, we are not chasing a fair value gap because there is no fair value gap. On the weekly, we are basically chasing this liquidity right here, this external range liquidity right there. Okay, I used the wrong tool to mark it, but nonetheless, I'll change that. This external range liquidity, that is what we are chasing on the weekly time frame. So with that said, we know that when the bears keep on taking control of the market, this is where they're ultimately chasing, right? This is where they're ultimately chasing. It's this external range liquidity. So with that said, we know that if that liquidity is violated, we still have this low right here, this liquidity right here, and this one right here, right? The extreme one right there. But let's not look too far. So for now, we'll just look at last year's low. So that's where the market is heading to. Why? Because ever since we started this year, the market failed to reach to last year's previous high, right? Higher low. So with that said, look at how this weekly candlestick broke this whole bullish range. There's a lot of sellers and they want to take full control of this market. Full control of this market. They don't care about the buyers that are here. So with that said, on the monthly time frame, okay, let's just let it load. There we go. On the monthly time frame, guess what? Look at this bearish pressure. Look at the previous month, how the sellers just got all the way in. Look at this month, how the sellers are just taking control. So clearly, we are not probably going to respect this fair value gap, but there's still a possibility for it to be respected. Hence why we need to be looking at our lower time frames when price sweeps this liquidity and enters into this liquidity or the daily fair value gap right there. We need to keep our eyes open for any bulls, because those bulls can easily be the bulls that actually, let's go to H4, the bulls that take us all the way up into this fair value gap right here. It can easily be those. So with that said, this H4 fair value gap, we need to keep our eyes on if we actually have bulls coming in on the M15 time frame. Then we know that to buy, we're buying basically to keep selling. And if this fair value gap is violated, then we already know that 50% of this one, which is around about here, 50% of this one, and a safer space would be this breaker block right here. This breaker block right here. So basically, let me just mark that. This breaker. And this is also our H4 fair value gap. Right? H4 fair value gap. So with that said, we know that if this H4 fair value gap doesn't hold and the market just keeps pushing up after, let's say, it sweeps this low and gives us a change of character to the upside, then we know that we can look to sell at this fair value gap. And if this fair value gap is violated, we know that we could sell at this breaker or 50% of this H4 fair value gap. So with that said, guys, that's basically what we'll be looking for this week, is for the sellers to keep taking control of this market. Because as you can see, the higher time frame sellers are in the market. The higher time frame sellers are in the market. So yeah, guys, that's basically what we're looking for. In the H1, it's the same thing. Basically, we're looking for the market to sweep this liquidity. Then we'll start looking for change of characters to the downside, and to the upside, I mean. So basically, we'll be looking for something like this over here. And then we can buy that market, of course, into this fair value gap, or we can actually buy that market all the way into this breaker, depending on how strong the bulls are and want to take this retracement in, because there is very nice liquidity that is resting right here. There's very nice liquidity that's resting right there. So that's why I say there's a chance that the market can also pull back into those ranges right there, right? That breaker block and that H4 fair value gap. So yeah, with that said, guys, basically that's what we're going to be looking for into this week, is for sellers to keep taking charge of this market, and we keep forming lower lows and respecting our higher lows. With that said, guys, yeah, this is GroundUp Breakdown episode 7. And as I said, guys, I appreciate all the love that you guys have been giving me watching all these videos. And yeah, without any further ado, guys, have a profitable week. Let us plan the trade and trade the plan.